Mexico. All right, that is the opening bell on Wall Street. The Vicar General of the Archdiocese of New York gets the honor today, joined by Catholic Charities of New York.
Hey.
All right. Let the spirit move you. Here is a look at Wall Street this morning. U.S. stock futures opened higher as global oil prices slid back below $90 a barrel after a seeming pause in the fighting in the Middle East. Investors are also preparing for the busiest week of the quarter, with more big tech earnings reports due out this week and a Federal Reserve meeting. So let's bring in Axios reporter Madison Mills. Madison, we got to start with oil. Both WTI and Brent crude are hovering around $90 a barrel. Can we expect those prices to hang around? And I'm saying it as if $90 a barrel is a good thing. That's still high overall.
That's exactly right. As you guys have been reporting, a couple days ago, we had over $100 a barrel. So great news. We're down like 5% this morning. But the experts would continue to tell us that these day in and day out kind of intraday moves are unfortunately not always going to be sticky. So even if you get some headlines that the president is considering a move away or a reprieve from any of the tensions leading to oil prices rising, it's very difficult to see that trickling all the way through the system to lead to lower prices at the pump. Over the weekend, we had the highest oil prices, or gas prices, I should say, at the pump that we've seen in over 6 months. And we expect that to continue because of the amount of trade blockades that we're seeing, the continued tensions in the Strait of Hormuz, and the lack of clarity on any end in sight to this war as it reaches near the 6-month mark here.
So as we look for data points that may change things, we know that the Fed is supposed to meet Wednesday. They'll be discussing interest rates. The likelihood of a cut or a reduction, I think, is shrinking. Might the Iran war, the cost of energy and oil, impact that decision?
Yeah, it's a very difficult job for the Federal Reserve right now because they have to try and balance a dual mandate dealing with inflation, the continued increase in prices that we're seeing, and unemployment. And they have to kind of balance the two of those goals at the same time. What's really difficult about doing that right now is there's so much uncertainty. We just talked about the Iran war, but that is just one of the many parts of this economic soup that are incredibly confusing to monitor. You have confusion about whether or not AI is going to negatively impact the employment picture or whether AI could help with the inflation problem. You have continued supply chain pressures that are making inflation continue to be a challenge. And then, of course, you have geopolitical tensions, and then you've got new tariffs that the president announced last week. All of that coming together to create a really mixed picture for the Federal Reserve that has to try and suss out what the path forward is for inflation and then respond in kind with interest rates. Part of that leading to why we think the Federal Reserve is likely to just stay steady at the moment, and unclear yet how much they're going to signal about their own path forward, given that they may not even know what's happening next.
All right, it is quarterly earnings season. Of course, we are waiting with bated breath to hear what Microsoft, Meta, Apple, and Amazon have to say about their earnings. What can we expect?
Yeah, these big tech companies are on a massive spending spree. We are expecting them to spend $1 trillion over the course of this year alone just on their AI ambitions. A couple of years ago, I remember saying that it was crazy that they were spending like $200 billion total, and now we're already at quadruple that and expecting that to continue to grow in the years to come. Their argument for that is that they have to spend a lot of money on AI so that AI doesn't kind of ruin their business models. But there are a lot of big questions happening right now about AI safety and AI profitability. So investors are going to want to hear from these companies, how is your investment in AI actually paying off for shareholders? So that's going to be a key question. And then where all of them stand in their own AI ambitions. If they're a company that creates models and AI models and chatbots that you might think of, where are they on that development process? What AI goodness have they spread throughout their product lines to make this investment profitable and have a clear return for those investors? That's something that we're going to be monitoring in our coverage this week.
Yeah, by now, investors want to know, where is the AI magic? Where is the money we can make back after this massive, deep investment? So very good point. Madison Mills, thanks for being with us this Monday. Appreciate it.
Thank you so much. Thank you. Appreciate it.